Hello and welcome to Crypto Weeklies. In this video, we discuss Algorand and its token Algo. None of the content is financial advice. We start with the regression analysis and the price analysis. Currently, the price of Algo is coming in at around 21 cents. It's currently close enough to the 20-week simple moving average, which is at around 22 cents, and the 21-week exponential moving average at around 23 cents. The key levels to look for Algo in terms of its technical levels or if there is a continued downturn, is this green line over here at around 15 cents, sorry 17 cents, and this yellow line, which is the top of the range, at around 33 cents. Upon a breakout, if that happens in the last quarter, that is starting today of 2025, upon a breakout, the level to watch is that 77 to 82 cents. That's the most zone of confluence across multiple indicators that we'll be discussing today. And if there is a top of the channel that Algo visited and this descending white line over here, if the price meets that descending white line, that could take price of Algo close to that dollar target. That's about a 5x from the current price. With this regression based analysis, though, the fair value per the polynomial regression based interpretation of what the fair value of Algo is, this gray line says that again, this is a non-linear model which accounts for the bullish and bearish phases of the asset class, where the fair value goes up with time in the bullish phases and down with time, to account for the volatility in the altcoin market, to get the best possible deal at any phase of the market cycle, and accumulating at the bottom in the bear market, whereas accumulating at, relatively speaking, fair price in the midst of a bull run. Right now, the fair value per this analysis at around 55 cents. Price is almost 2.5x down from the fair value. So that means that the price is again, although not sufficiently close to that dotted green line, but that means per the risk levels, the risk levels for algo accumulation at this phase is currently only 1%. That means 99% potential reward and 1% potential risk per this regression based interpretation. If this model again also identifies what were some of the risk levels at the peak in 2021, the price peaked at 0.37 risk. In 2024, price peaked at 0.44 risk. Let's assume if this time around price in 2025 tops at around between 0.4 and 0.5 risk, the price forecasted per this regression based model is between 75 cents and about 90 cents, with the midpoint at around 82 cents as mentioned earlier, a zone of confluence. The peak standard deviation, 2 standard deviation residual for algo currently stands at around $1.40. If this can be projected, again, this projection is only going to be insightful only for a smaller iteration of time. So let's say towards the end of the year, the top of this dotted 2 standard deviation ceiling, if you want to extrapolate this, assuming that the slope of the ascend of the bullish bias for algo stays intact, as that for that the price has to monumentally move up with time. The good thing with algo is it has been following and making series of higher highs and higher lows since essentially October 2023. Also the November 2024, there were a series of downturns in the market, but algo continued to make a series of higher lows on this pair. And again, if you look at the highs from 2024 on, they have been higher highs consistently from December 2023, March 2024, and December 2024. So the top of the channel, assuming all of these bullishness stays intact, and if price were to meet that dotted 2 standard deviation ceiling, extrapolated one, in December, the price per this interpretation of the model could still theoretically go to that $2.50, between $2.50 and $2.90 level, close enough to that previous all-time high for algo. Again, at least not all time, the previous cycle based high in 2021 at around $2.89. Again, at launch price was at around higher than $2 at around $3 level. But if you look at ALGO from that perspective. Again, and try to analyze the delta between the price and the market cap growth. You would likely conclude that the price, which was again at this $3 level or something, in terms of price it was the all-time high, but per the market cap back then, market cap was essentially in few hundred millions, as the token had only launched, and the circulating supply was very low at that point. Whereas again in 2021 the market cap was much higher than in 2019, at around at peak at around 11 billion in December 2021, whereas right now it's almost at around 2 billion, so about 6x of the current market cap, slightly more than 6x of the current market cap. But if the market cap from here grows 6x, the price would not be close enough to the previous all time, like the market cycle base high. Back then the price at the market cycle based high was at around $2. At a weekly average, I think was at around $2.15. If we grow 6x from that 20 cents level, it would be at around $1.20, between $1.25 and $1.30. So again, that's because back in 2021 fewer algo tokens were in circulating supply. Right now, as a percent of the max supply, the circulating supply is almost 88% of the max 10 billion, out of which 8.8, roughly speaking 8.8 billion algo are in circulation. That's again a good thing in terms of tokenomics, as it relates to the likelihood of token dilution getting mitigated as more and more max supply is already in circulating supply. Yeah, so coming back to the machine learning based price forecast for algo, this is all of these charts are available on cryptoweeklies.com, link on the bottom of your screen, all for free, no signups or anything required, and also no irritating ads on that platform. Get updated every single day and react to the recent price action. Again, these are all live models. This model uses weekly average price for algo since 2017, and per this model, if let's say the price stays in a bullish mode without any major euphoria catalyst towards the end of the year, price forecasted is close to that, between 38 cents and 42 cents. That basically gets algo top of this yellow line and exceeded by about 10 to 20%. Whereas the euphoria ceiling for algo takes the price to that 82 cents level, as mentioned earlier, a zone of major confluence towards the end of the year. If there is a 2 standard deviation 95 percentile ceiling bull case, that means if we were to ask the machine learning model with 95% confidence what could be a theoretical bull case, and the range of that bullish predictions, the model said between again using historical data and seasonal ARIMA based machine learning model and LSTM based residual analysis, the model forecasts the price action to be close to that 82 cents if the price action were to stay in a euphoria mode from today till end of quarter 4 2025, that is towards the end of December 2025. So the three distinct models saying price could theoretically go to 82 cents with some euphoria ahead of us, if that kind of market is ahead of us. The time weighted average price risk for algo is relatively low. Time weighted average price is at around 45 cents. This line would be more helpful in 2026, mid to late 2026 potential bearish phase of the asset class. In terms of the 20-week simple moving average, price risk is currently at around 0.25. That means 1/4 risk, 3/4 reward. In 2024 this risk level went as high as about 0.6. So if that kind of environment is ahead of us, or in 2021, that essentially towards the top the risk levels were at around 0.75. So between 0.6 and 0.75, the risk, if the price were to go to that risk, that a dollar target is still within theoretical reach. Dollar 2 cents, between a dollar 2 cents and dollar 28 cents. That's the price forecast per the 20-week simple moving average price-based risk level. That would take some euphoria, and again per the machine learning model, the third scenario, the 3 standard deviation case for algo again as, and these euphoria and blow off top scenarios are much better explained with shorter terms, shorter time periods, rather than forecasting too much out into the future, because again, euphoria phase cannot be sustained by the market by can only be sustained for few weeks to months. Again, the 3 standard deviation ceiling is for algo is at all the way at around $2.85, as mentioned earlier, close enough to the previous market cycle based high as at around $2.80. Coming to the overall estimated bull run peak scenario as it relates to confluence of several different risk based models, with this hypothesis that if there is a major euphoria ahead of us, the max permissible bullish price for algo per this model is at around $4. That would take some doing with the regression risk right now at around 1% if it goes to the top of the channel, time weighted average price risk going to the top of the channel, SMA risk going to the top of the channel at in unison, and again the weighted risk going from the current 5% risk to, let's say, 95% risk. That kind of essentially is a 18 to 19x reward if that kind of scenarios pan out all in unison. So that is the theoretical max ceiling for algo for this bull run at around $4. With that, I would like to conclude by saying most zone of confluence, if there is some euphoria in the market, is somewhere between 78 cents. Again, this orange line as well describes between 78 cents and 82 cents as it relates to machine learning model, regression based analysis, and several other models. The stretch goal between $1 and $1.28. Again, the red line at over here at around $1.45 is theoretically possible, and max stretch ceiling for algo at around $4. With that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.